All right, yo, what is up for y'all in the YouTube replay? I want to start this stream off. First by saying, I know I was normally going to stream at 8 o'clock, but something came up later. So we're streaming now. It might only be like an hour and 30 minutes, but I still wanted to stream. But check this out. Let me give you a quick portfolio update. We're going to be streaming tomorrow, of course, and we stream every day. So if you wanted to follow button, I appreciate that. But hey, let me give you a quick portfolio update and then get into this first stock that I think is a pretty interesting buy as an interest rate sensitive play. And it's not just me that bought the dip on them, or I haven't bought the stock. I have not bought the stock at all. But what I meant was Warren Buffett just bought the dip on this stock. And actually, he bought the dip at around $301 a share. So you could get it at a much lower cost than Warren Buffett did. So we'll go over that stock in a minute here. Hey, what up, Looney? Hope y'all are having a great Sunday. So check this out. Here's our Robinhood portfolio. Here's our year-to-date performance. This is known as our buy and never sell this is known as our dividend-only account, where every stock in here pays a dividend. But most of these, as you can see, are like dividend growth companies. You know, Meta, Carlisle, United Rentals, Google, Constellation Energy. We also have a Roth IRA, which I can't wait to see how we open. We're starting to be really more growthy here in our Roth IRA. You know, with our new addition of Innodata, Wix, CoreMedics, Perimeter Solutions. I'm going to go ahead and say this now. Hey, try not to, hey, come on, man. Look at this right here. Waste Management's a great never sell stock, but I might sell it to buy something I think will have a better total performer. Hey, K-Dude, what up, dude? Good to see you, man. Hope you're having a great day. Actually, let me go ahead and get into what I was going to talk about. Let me go and get into this first stock right here. And someone said, how do you know Warren Buffett bought it? I'll actually show you that right here. So the first stock actually I want to recommend is ticker symbol Pool Corp. They literally have a monopoly on the pool, like the pool distribution business. So all these like independent contractors who come and fix your pool for you, they all order their parts from Pool Corp. And here's how we can tell that Warren Buffett just bought the dip. He actually bought the dip at a much higher price than this, but we can go to Warren Buffett's portfolio right here. We can view Buffett's latest portfolio changes, and we go to increase. He actually just bought another 1.99 million shares of ticker symbol Pool. He bought some new positions as well. You know, again, we know this because Warren Buffett has to make all his trades public by SEC law, so we can see his exact portfolio and all his holdings and stuff like that. So we just saw that it was disclosed he bought more Pool Corp, and this one's a really interest rate sensitive sector. Their numbers are going to look bad because, you know, the rates have been high and people aren't really spending on their pools as much. So if you go to the revenue right here, you know, it's single digit, you know, 1% growth, 0.8, -4, negative. So the revenue is on a slow growth, but as we get into a lower rate environment, this should really benefit. Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, first link there. It's a brokerage. But look at this net income. This is the good news that they made actually, if you average it out here, they're making close to, I'd say 80, 90 million in net income a quarter. If we go back to like 2022, 2021, they were booming, you know, easily 100 to 200 mil in net income a quarter. But now, you know, things are struggling, but they made 127 million in net income this quarter. Remember that they made 127 mil in net income and they pay a dividend. The dividend only cost 46 million. So they have a lot of room to potentially raise the dividend. And since they have so much leftover money, they're even spending around 50 to 100 million a quarter on share buybacks as well. So yeah, you get a nice yield, a near 2% dividend. So you buy the stock right now, you're basically getting a 2% dividend. I would assume there's going to be more slower growth to the dividend because of the slow growth of the sales. But anyway, that's one you could potentially buy the dip on as we go into a lower interest rate environment. And even Warren Buffett just bought the dip on them. So yeah, I used URI last week for a bucket truck. Hey, dude, United Rentals actually just reported earnings and the stock fell after. So check this out. You know, stock went from 1,000 to 860. So, you know, they were kind of overvalued. They rallied too much before today. So that was kind of expected. But yeah, if we go to the right now PE, they traded 22 times PE. That's pretty fair. And this is the part that I love about United Rentals the most. It's what are they doing with their net income? Again, one of the reasons the stock is they gapped out is because the net income fell year over year by 1%. But check this out. What are they doing with the 700 million in net income a quarter that they're making? So they made 700 million in net income this quarter. They make that every quarter. They now pay a dividend, and the dividend only cost 115 million. It used to cost 118 million. How did the cost of the dividend go down? That's because of the share buybacks. I kid you not, they spent 600 million just this quarter on buybacks. They're spending 300 mil to 600 mil every quarter just for eternity on share buybacks. So that's what I love about this company the most, how shareholder friendly they are. Like if we go to their here's what the share buybacks actually do for you. If we go to the net income fell by 0.99, but the net income per share actually grew by 2%. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio. So that's what makes the EPS go up higher than the net income growth rate. So that's what's pretty cool. And you get a near 1% dividend with this company. So you get 3% in share buybacks, 0.8% in dividends, a couple percent stock price appreciation every year. I think that should be a company that outperforms the market in the long run. And full disclosure, I do own them. They're part of my they're part of my dividend only portfolio. We're up 40% all time on them. Yeah, not too shabby. I do like United Rentals. And hey, Looney supporting the stock by renting a truck from them. Yeah, it's really the boring stocks that always do good. Hey, what up, Red or Green? He said XERS. Let's check it out. The company recently changed its name last week as well. Okay, let's check it out. So they've done great the past couple months here. Check out the momentum that they've had. Let's go see if they deserve that crazy stock price appreciation. So, oh yeah, they sell a bunch of prescriptions like Ricalev. Check out the growth here. This is what justifies the crazy stock price appreciation. The revenue is up 135% year over year. After it grew 86. After it grew 3,000. Again, we're comparing to small numbers here, but as long as they keep up this growth rate, that's great news. And that's just one prescription. They also have Gvoke, or I'm probably messing up the name here, but that also grew 17% year over year. Whatever that is. This one actually fell 12% year over year. But anywho, are they beating on expectations? Yeah, check that out. Every quarter they beat on the orange line is what the analysts expect. They had a big beat on revenue, a big beat on EPS, which is net income, and a big beat on EBITDA. So no wonder the stock is doing so well. They honestly probably deserve to be doing this good. Let's see the revenue growth. Yeah, when we combine all the prescriptions, the total revenue is up 48%. Again, mainly led to the growth by Ricalev, whatever this is called. So as long as they continue this growth here, I mean, this stock will probably just continue to go higher. And what's are they net income positive yet? So net income. So they are losing net income every quarter still, but notice they only lost $2 million. You know, if they're narrowing their losses. I mean, this is great news. Accounts at what company was that? Hey, I forgot what company we were looking at there. I think it was ticker symbol Pool. By the way, if you miss anything, I'm streaming on YouTube and you're able to like rewind it, which is cool. I know you can do that on TikTok. Goop said, can we look at MSTR? So this is basically just a holder of Bitcoin. Go Palantir. Hey, what up, stocks? We'll look at Palantir too. I love that company. So here's MicroStrategy, or actually they changed their name to just Strategy. So this is Strategy now. Basically, what does this company do? Well, they own a bunch of Bitcoin. Check out their assets. Their assets literally went from 8 billion to 73 billion. How did they get all these assets when, you know, the company, if we go to the revenue is 100 mil a quarter from their crappy software. Again, it's from them issuing shares. That's the crazy part about this Ponzi scheme that works in a bull market. They were able this quarter, again, cash from financing activities if this number is positive, that means they either diluted you by issuing shares or they issued debt. And this quarter, they issued $18 billion worth of shares. They diluted the shareholder by like 40% in one quarter, but bought, you know, basically 20 billion worth of Bitcoin. And that Bitcoin is since up like 40%. So, and every other quarter since then, they dilute you by 8 billion, 6 billion, 5 billion, and they just buy Bitcoin with it. So basically this company just issues shares and buys Bitcoin. I'd love to be the CEO of that company. But yeah. And literally whenever they buy Bitcoin, it props up the price of Bitcoin, which props up MicroStrategy even more, which then leads them to buy more Bitcoin. So kind of cool, but I'd rather just own Bitcoin. I don't own them. Again, no real moat there. It's literally, there's new recent changes. And one of the reasons the stock is falling more than Bitcoin right now is because of the new SEC changes around the company having to get more shareholder approval. Because back here, I don't know, like shareholders would normally need to approve this. They literally diluted the whole company, every shareholder by 40% in one quarter, just out of the blue, just like it was normal. So there's now new recent SEC law changes around having to issue so much shares. But anyway, they're interesting. I just own a bunch of Bitcoin. Picked up SFM at $79. Was hoping for an uptrend. Yo, Ven, we got to look at Palantir as well. I keep forgetting all these. So actually, let me go ahead and look at Palantir now. Then we'll get to Sprouts Farmers Market, which I think is a good one to buy the dip on. So here's Sprouts Farmers Market, Palantir. This Palantir, they report earnings on November 3rd. Wait, that's tomorrow. So literally this company reports earnings tomorrow. So get ready for a lot of volatility in this company. Here's what I love about them. The valuation's pretty nuts. You know, if we go to their price to sales, you know, not price to profits, but price to revenue, it's 138. Yo, Xylan, yo, homie, thanks for the gift there. The pumpkin latte. Yo, if you got a stock, you're going to look at Xylan, let me know. I appreciate those gifts there. But yeah, here's why they deserve a high multiple though. If we go to their government revenue right here, this is crazy. You know, a lot of police stations use their software, the military, the Air Force. This business is up 49% after it grew 29, after it grew 19. So like literally the growth rate is growing on this company for the government revenue, and not just the commercial side, or not just the government side, but also the commercial side with other S&P 500 companies. That's up 46 after it grew 32, after it grew 11. So everything here is headed in the right direction, beating on every metric every quarter. The first ever $1 billion revenue quarter, they did 330 million in net income, which means margin expansion, 33% net margin, absolute monster of a balance sheet. Literally no debt on this company and like $6 billion in cash. So Palantir is a great never sell company, but it's hard to, I'd love to own them. I really would, but the valuation is nutty. Like it's really ridiculous. Hey, what up, Mikey? Good to see you, homie. So let's pull up Sprouts Farmers Market right here. Oh, yeah, we were looking at Pool Corp. I think add them to your watch list potentially to buy the dip on. Ooh, hopefully it doesn't show my password here. But anyway, yeah, we haven't even covered this yet. Here's our Webull portfolio. We're only up 22% all time in here. But one of our big losers, I love just being fully transparent with my portfolios, and Sprouts Farmers Market, we're down 40% on them. And if you're looking for a stock to buy on a dip, not financial advice, I want to buy one that has good quality fundamentals. And I think this one is worth buying the dip on, or at least nibbling, not financial advice. But they all that happened was a slight miss on revenue, but they beat on net income and they beat on EBITDA. But yeah, check this out. This is a healthy grocery store. The sales are up 13. So the revenue's up 13. But the net income is up by 31, which means literally margin expansion. That's grocery stores are a margin game. Every 1% margin that they can get, they'll take. So yeah, the margin expansion has been really good here. Literally everything here is headed in the right direction. They trade at 15 times net income. They bought back like 25% of all the shares since 2019. Like they buy back legit 4 to 5% of the shares a year. I love Sprouts Farmers Market. And now that the stock's on a dip, I think they'll do more buybacks. What app was that? Oh, your app name. Yeah, hey, I'm not sure what app you're talking about there here. Yeah, all these are brokerages right here. If you wanted to if you want to buy stocks, you need a brokerage. All these brokerages are all in the link tree in my bio. They're all affiliate links too, full disclosure. My favorite one out of all three of these is Moomoo, the one I'm on right now. No fees at all. It's free. Best analysis tools. Link tree in my bio. Very first link there. So let's see here. How much further drop does Progressive need to have to buy in again? Well, hey, I think it's worth buying even right now. And I actually just bought a little fractional piece of them. Someone said, why Coca-Cola Consolidated and not Coca-Cola? Yeah. So I love this company because of their fundamentals here. And I think they're going to have a better total. They're going to perform better than Coca-Cola stock. Actually, we can compare the two. So here's Coca-Cola Consolidated, and here's the normal Coca-Cola company below it. If we kind of zoom out here, as you can see, Coca-Cola since 2019 has done nowhere near as good as the bottling company for Coca-Cola. So that's not why. They have a way lower dividend, a 0.77% dividend, but notice the payout ratio. They only trade at 5, or they have a 5% payout ratio. They traded 18 times net income. They have good pricing power. This quarter was actually really good. The sales were up 7, and the net income was up by 23. They had a record free cash flow quarter over 300 million. It's never even been close to that before. So I just really like this company's numbers. So yeah, they bottle for Coca-Cola, Dr. Pepper, Monster. Pretty boring business, but I love their numbers. Hey, what up, Dilly? Palantir, Nvidia, and the government should be working together in the more future too. Yeah. BYDD. What is that one? BYDDY. BYD Company ADR. Oh yeah, this is that Chinese electrical manufacturer, kind of like a competitor to Tesla. This is really your Chinese manufacturing play. They're a Chinese company, so obviously we're going to convert the currency from Chinese yuan to USD. So yeah, automobiles, mobile, handset components, assembly. Yeah, look at the growth here on the annual sales here. That's great growth. Automobiles and related, that's also seen immense growth. So yeah, let's go check out the bottom line. So yeah, they're struggling with margins just like Tesla, but they're actually making, I think, a little more than converted to USD. They're making more than Tesla, I think, a quarter. They're making, over $1 billion in net income a quarter, which is good. Dividend, yeah, and you get a 1.43% dividend. The payout ratio is 22%. So they trade at 12 times PE. What's the market cap on here? They're they're way smaller than Tesla. They're worth $117 billion. So $117 billion company making, $1 to $2 billion a year of net income, or no, $1 to $2 billion of net income a quarter. So that means that, yeah, they literally trade at 12 times PE. I don't know. There you go. JEPQ. Hey, what up, Mo? What up? How are you, man? Hey, I'm doing great. Thanks, Mo. I appreciate that. JEPQ, this is your covered call ETF play. So obviously it's underperformed the actual NASDAQ, but it's still it's actually at an all-time high right now. So check this out. You're mainly buying this to maximize your dividend income. You get a 9.28% dividend yield. It literally just sells calls on the NASDAQ. And that's an asset you don't really want to sell calls on because you're almost for sure going to get called on it. But that's why the income is so high. Because the chances of getting called is so high. But anyway, you buy this to maximize your income. You get a great 9% yield. Are you the real Hey, what up, Carl? Meta. Oh, yeah, Meta at this price. I do like Meta at this price. Or remind me to look at Nebius. SMA, remind me to look at Nebius after this. I want to get to that stock as well. So yeah, Meta platforms, I do own them, full disclosure, in my Robinhood portfolio. We got 5 shares of Meta. We're still up on them. We're up 23%. But during the past week, yeah, Meta fell 12% because of mainly a one-time tax charge. We go to their net income down here at first glance, this is terrible. The net income is down 82% year over year. But as we can tell, we just look at operating profit. That was a one-time adjustment. They had their first ever $50 billion plus revenue quarter. They did 51 billion revenue, up 26%. The 20 billion of operating profit and add tax after that. And cash from operations was a record 30 billion. So literally they just had a little one-time tax adjustment from the big, beautiful bill. So everything else I love about this company. Actually, we can see it's not included on this app right here. This is the non-adjusted EPS number. Actually, I can show you that right here. So for Meta, yeah, here, oh wait, never mind. Oh, no, here it is right here. So this is net income. This is their net income when you exclude the one-time tax charge. Their net income grew 18% year over year. They really did 18.64 billion in net income. Then you include the one-time tax charge. But anywho, that's why I'd buy the dip on this one. I put them on the watch list. What's their forward PE? Let me check. They trade at 28 times forward PE. I mean, that's pretty fair for a Mag 7 customer or Mag 7 company. They literally have 3.5 billion daily active users. So half the world is on a Meta app once a day. They just created Threads. Threads now has the same amount of daily active users as X does. They're introducing ads to WhatsApp. So I just love that company. Miguel said FXI stock. Let's check out. Someone's saying red. Yeah, hey, if you got a stock you want me to look at, give me the ticker symbol and try not to spam there. But yeah, here's iShares China Large Cap ETF right here. So let's check out what its top holdings are. So Alibaba, Tencent. Dude, Tencent is the best Chinese stock of all time. NetEase, BYD. So yeah, Trip.com. Tencent, this is my favorite Chinese stock. If you didn't know this is a huge gaming company. They own Riot Games. So if you've heard of Valorant, League of Legends, they own that. They literally own 49% of Epic Games, which is Fortnite. So they own 49% of Epic Games. They own Supercell. So you've heard of Clash of Clans, Clash Royale. They own that. They own PUBG. I mean, the list goes on. And they own like a 10% stake in Reddit, 10% stake in Snapchat, 10% stake in Pinterest, a 10% stake in so many other companies as well. They're legit a beast of a company. All right. So, all right. Let's see here. What do you... All right. Let's see here. Can you look up stock price for Sega? Hey, what is the ticker symbol for that? I don't know if that's a company. Sega Sammy Holdings? I don't think this is the company. Or maybe it is. I don't know. Amusement and entertainment business? Then maybe it is this one. Gaming machine business? Gaming business? Well, there you go. Oh, so we're going to convert the currency from Japanese yen to USD. And it looks like when we can do that, this isn't good, their sales. The revenue is down 13% year over year on Sega. So revenue's down 13. And look how choppy that net income is. Yeah, so it used to be so consistent, but now the net income went negative this quarter, positive, then back negative. So I don't know if I'd buy the dip. I don't know. They're interesting. I didn't even know they were public, but they're Japanese. Nintendo is also Japanese. So, oh yeah, we got to get to Nebius and then we'll get to Goldman Sachs. What app or program are you running to? Oh yeah, hey, by the way, this is actually a brokerage where you buy stocks on. Yeah, if you want to get this brokerage, it's in the link tree in my bio, the very first link there. Yeah, you can track all the super investors portfolio like Nvidia right here. It's a free brokerage, costs nothing. But if you go and deposit $100, we'll both get like some free stocks, no commissions or anything. I love this app. But anyway, we go to the Nvidia portfolio right here. They own CoreWeave, APLD, ARM, and then they actually own Nebius stock. Again, just because Nvidia owns a company doesn't mean you should. You should always go do your own research on it. And their numbers are really great. They had a $17 billion GPU deal with Microsoft. So some of the Microsoft Azure clouds are going to be hosted on their servers. And even before that news, this was such a growthy company. Check out the revenue. The revenue went from 14 mil to 100 million this quarter. And they're still losing net income every quarter, like 100 mil. But as long as they keep up that growth, and the analysts are expecting them to, 265 mil in 2 quarters, that's crazy. Hey, by the way, yeah, hey, this is a brokerage. It's a software. It's called Moomoo. If you want to get it, it's in the link tree in my bio. First link there. They ask for a bunch of information. You get a tax form every year. But yeah, I favorite brokerage. Okay. Which one? Beyond Meat. Yo, that's a big. Wait, no, Goldman Sachs. We got to get to Goldman Sachs right here. This is a bank right here. JP Morgan's done phenomenal. And then Goldman Sachs has actually done slightly better. I think Goldman Sachs might be the best performing bank in the past 5 years, or in terms of mega banks. I don't know, but let's check it out. Even if you buy the stock right now, you still get a good dividend. You get a 1.65% dividend yield. The PE ratio is a 16, so they traded a fair, multiple for a bank. Or actually, what's the industry average for a bank? Let's see. Industry average is a 21, and they only trade at 16. So maybe there's even more room for them to go in. And annualized return on tangible equity, they're in, asset and wealth management. So kind of like they collect these high margin management fees. That business actually declined 2% year over year. Global banking, that grew 23% year over year. Not too shabby. So if we go to their net income, wow, this is in USD as well. They legit make Wait, that's just this quarter. So they're actually, they make it weird to look at, but because it's cumulative, but they're making like a ton of net income every quarter. These year over year growth rates look amazing. So they deserve to be at all time highs. All right. What stocks did you buy this week? Well, I haven't bought anything this week, but last week, on Friday, I actually bought a share of MUSA stock, Murphy USA. That's an oil and gas play. I do like them. And in our Roth IRA, I might sell this, I don't know, just for something more growthy in the future. But it's kind of like I bought one share of Waste Management, a little bit more Cormetics, CRMD stock over the past week. So yeah, that's kind of what I've been doing. I think Meta's a great buy. I agree. Yeah, I agree there. AITZ, how's it going, man? Mikey said, wait, SCHD stock. Let's do this one. Yeah, this is actually an ETF right here. So it's a basket of stocks right here, and it has a pretty good dividend. That's what people like about SCHD is the nice dividend you get and I love its top. Like AbbVie is a great never sell. Like I'd buy AbbVie individually. Cisco's good. I think Cisco's near all-time high. And then there's some like health, like Merck, Amgen, Lockheed Martin, Coca-Cola, Pepsi, Chevron, Altria, then some of the higher yielding names. So yeah, you're basically buying this to get a 4% dividend. You don't expect this ETF, and it won't, just because of the nature of how it works. It doesn't let its winners win, but this will never sustainably outperform the S&P 500 in the long run, but it's not supposed to. You're just supposed to get a 4% dividend, and it's kind of a nice way to get diversification away from the tech-heavy S&P, I hear some people say. So there you go. I wouldn't call anyone crazy for owning that. Definitely better than not investing at all. So let's pull up Beyond Meat right here. This is a huge short squeezed, momentum, like meme stock. We can see the short interest. Like, look at the short interest. It's literally 67%. 67% of every share on this are short on this company. So Americans have said no to this stock, unless I was doing some short-term swing trade. Hey, William, dude, thanks for the rose there. Yeah, we'll get to GLD after this. I appreciate that. So yeah, if we look at the top right on Beyond Meat, they're only worth $650 million, and the company burns through money every quarter. If we scroll down here to the net income, they're losing legit 30 to 50 million in net income a quarter. In the past year, they've lost, call it 170 million. That's well over 10% of the entire company. They're losing money every quarter, and they have double the amount of liabilities as assets. How are they going to pay off all this debt? They can't issue shares. They can't issue more debt. And if we just go to the revenue, the lifeblood of the company, the sales are down 19 after they fell 9, after they fell 31, after they fell 2. Like, I can see why this stock is at an all-time high or all-time low. There's a little bit of momentum here on some, like, I don't know, Walmart news, or I don't know, but not a stock I trust. I need to learn from. Hey, by the way, I appreciate that. Yo, by the way, I sell nothing. There's no way to really learn from me besides watching the streams and watching my YouTube videos. I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, never DM you, nothing like that. But yeah, if your best way to support me though is just watch my YouTube channel, subscribe to my YouTube channel. It's called Nathan Roberts. Also in the link tree in my bio. But you can just type in YouTube Nathan Robert. All right, so rare earth. Yeah, hey, the rare earth mineral stocks have been interesting, but I heard that China is now making it easier for us to get rare earth mineral exports from them, and that's what's leading to like a slight fall. Like MP Materials, basically, China made it really hard for the U.S. to get certain rare earth minerals, so the government took a 10% stake in MP Materials, and literally, them in coordination with the U.S. government are literally opening up this one mine in the U.S. that's going to supply the U.S. for the next 50 years of certain rare earth minerals, just from this one mine for MP Materials. So that's really interesting. We can see the sales are supposed to spike up to 117 million 2 quarters. So that's one rare earth mineral play, momentum play. They were like the biggest one. Are the Beyond Burgers any good? Anyone does it try one? I actually don't think I've ever had a Beyond Meat burger or like an Impossible burger either. I'm fine with. Hey, what up? Garlic said XPO stock. Let's check that one out. Then we'll get to what broker is that. Yeah, hey, if you want to get this brokerage, it's in the link tree in my bio. First link there. It's called Moomoo. Yeah, first favorite one there. Okay, so here's XPO stock right here. They're a $16 billion company. So look at them since 2019. The stock has done phenomenal. It was $30. Now it's $140. So it's like 5x since then. What do they do? So North America, they're an less than truckload company, kind of like an ODFL. They've actually done way better than like an ODFL. That's surprising. So the revenue's up 2 like bad growth, single digit growth, but that's normal for this environment right now. So yeah, revenue's at single digits, low single digits. The net income they lost the net income fell by 13. So yeah, their net margin collapsed. The stock's done great nonetheless. I mean, maybe because they don't pay a dividend. So another stock kind of like this that literally does the exact same thing as ODFL, Old Dominion Freight Line. They're also a less than truckload company. That's down 6% year over year. So there you go. Hopefully that was helpful. I'd be careful. There's something that's causing the stock to go up more. Work as a store manager. Unfortunately, the Beyond products don't move. There's tons new. Oh, wow. Tons new competition. Wow. Any fixed alternative? There is EME, which surprisingly just tanked after earnings. There is EME stock, which, that's the reason Comfort Systems fell 5% that one day, because the stock fell 13% in one day. So yeah, there's EME stock, but yeah, that's the only other or Train Technologies as well. There's EME and Train Technology. I love Train Technologies. So yeah, those are your two alternatives. Grab, please. Yeah, hey, this is actually a cool Hey, Celeray, remind me to look at PDEX2. So we'll try and get to all these. But here's Grab Holdings right here. If you're wondering what this company does. Oh, dude, William said gold earlier. Hey, William, remind me, what was that stock you want me to look at? It was some gold company. Remind me to get to that one, William. I apologize. Thanks for that gift too. But here's Grab Holdings right here. If you're wondering what they do, they literally do exactly what Uber does. They're an Uber copy, but they're an international play. Check this out right here. Notice the US and Canada are none of their revenue. Most of the revenue comes from Malaysia, Indonesia, Singapore, Philippines. So it's an international Uber play. And this is what's so cool about that Uber decided to back them. This gave Uber instant international diversification. Uber bought 13% of all the shares, and then Toyota Motor owns 5.5% of all the shares. So it's really interesting to see them take those stakes. They're really growthy. The revenue's up 23% to 820 mil. And it's supposed to continue to climb higher. Yeah, it's supposed to go to 930 mil. The EPS, they're net income positive every quarter. They're free cash flow positive every quarter. So actually, this is one I put on the watch list. It's a way to get a exposure. Like, we know this commodity of people need ride sharing. Like, no matter the country, people need ride sharing. People want food delivered to them. We know it's a proven business model, so it should work in all these other countries. So it's a way to get exposure to international. That's what I like about Grab. Plus, they have no net debt. They have like a net cash position. They're making net income every quarter and free cash flow, backed by big names. I'd like them. Okay. Hey, what up, Brian? Good to see you, homie. I was just gonna say, made lots of generic Beyond Meat came out with generic versions. Yeah. And I know I remember when they came out, there was like a Beyond Meat KFC collab and a Beyond Meat like McPlant burger in like the Canada, and it just didn't do well. So I guess McDonald's and Yum brand stock being at all-time highs and Beyond Meat being at all-time lows is saying that Americans don't like plant-based meat. Or anyway, yeah. Hey, ooh, I'm gonna miss so many stocks here. SE stock. This is C right here. I actually really like this company. They're a nice growth name. What app is this? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. There's actually a brokerage. It's where you buy stocks on. Yeah, I love this brokerage. But anyway, if we go to SE right here, oh, here's a cool metric we get. Their quarterly active users are 664 million. But yeah, they're an e-commerce play. That's 71% of all their sales. Check out the growth. Like, this is great. Revenue's up 33, after grew 16, after grew 51. But it's like an international e-commerce play. Check this out. Notice where all the revenue comes from. Southeast Asia is 70% of all the revenue. Latin America, 20%. Like, it's an international like Amazon play. Yeah, international Amazon play. Sales are up 38. They're making good net income now. This is great. 400 million net income for the past 2 quarters. So actually, SE stock, they're on my watch list as well. They're good. They might be a little overvalued here though. The PE is high, but they deserve a high PE because of the forward growth. All right. Daniel said TMC stock. This is a kind of meme momentum hopium stock. No real or they're a startup. There's no real fundamentals here, but what they're trying to do, and I don't think they're anywhere near it actually doing anything, but they're trying to make these underwater robots that like go to the bottom of the water and like suck the mineral and take out the minerals out of the water, something like that. But I've owned this company before. This is a momentum play at this point. We go to the revenue right here. Like, it's tough to really trust this one with like real money. Like, if we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. They just don't have anything. And they're burning through a bunch of money every quarter, 75 million just this quarter. Luckily, they were just able to dilute the life out of the shareholder and fix their balance sheet. Like, we can tell they diluted you by 123 mil, but beefed up their balance sheet. They actually did the right thing. Whenever there was this momentum back up here, they diluted the shareholder, the stock tanked, but then eventually rallied. Anyway, a lot of hopium on that company. It's hard to trust. Thanks for the stream. What app are you using? Yeah, hey, NGY. You're not on TikTok. It's actually in the link in the description if you want to get this brokerage I'm on. If you're on TikTok, it's in the link tree in my bio. If you're on YouTube, it's in the link in the description. It's a brokerage. It's called Moomoo. Okay, so let's see. Can you do INX? Oh, wait, you said .INX. I can't cover index funds, but if you have an ETF, an exchange-traded fund, I can check that out. Ooh, hey, Briz said SoundHound AI. So this is actually an interesting name. If you're a shareholder of SoundHound AI, there's one metric you want to watch, and it's this is what moves the stock. It's their subscription service revenue. This is the whole reason there's a bunch of momentum out here. But check this out. Just a couple quarters ago, this was a big nothing burger. Their subscription revenue was nothing. 400, 300,000 a quarter. But look at the growth. These year-over-year growth rates in the middle is like a dish growth rate. What's it going to be the same time next year? It was 32 million of revenue this quarter. Subscription revenue is all reoccurring. The royalty revenue from them selling products, that has been on a nasty decline. But anyway, they had a big beat on what the analysts expected from the subscription. They expected 32 mil. They reported 42. So anywho, they're still burning through 40, 50 mil a quarter. But as long as they keep up this growth rate of the subscription revenue beating like this, stop. I think we'll probably just continue to go higher, but I wouldn't trust a lot of money with that name just because they burn a lot of money. But they're not that bad just because of that the growth there. Okay, PDEX. Let's check this one out. So Pro-Dex right here. Haven't heard of this name. Let's see. So they're a $118 million company. So they're only worth $100 million. Let's see what they do. So they sell medical devices, repairs. How's the repair business? Yeah, so they're like maybe repair, service the machines, whatever. For the fiscal year 2025, looks like that revenue's at a record. Let's see what the medical devices revenue is doing. So they sell the medical devices and then they service them as well, which that's what I love about Comfort Systems as well. They sell the HVAC machines and they service them, and that's like 10% of their revenue. But yeah, look at the revenue. It's up 24% after it grew 24, and they're netting. That's the crazy good part about this stock. Out of all the companies out there that exist that are worth 118 million, I want to get the one that actually makes money every quarter. They're net income positive every quarter. So is there like some short thesis on this? Yeah, I guess 8% of all the shares are being shorted. So I guess there's some sort of short thesis here, but I'll actually put them on the watch list. What's this app? Yeah, hey, again, this is a software. It's a brokerage where you buy stocks on. They ask for a bunch of information, send you a tax form. If you wanted to get it, it's in the link tree in my bio, the very first link there. Brokerage called Moomoo. So yeah. Hi, Nathan from Singapore. Hey, what up, Zippy? Good to see you, man. Hope you're having a great day. Yeah, happy Sunday, everyone. By the way, if y'all wanted to follow on, we stream every Sunday this exact same time. All right, not usually this exact same time. Try said, what about Bull stock? Yeah, so this is Webull right here. I do have a Webull account right here. So hey, I don't own, actually I own Robinhood and Moomoo stock. So I own Robinhood stock and where's Food? Yeah, Futu right here, which hit an all-time high on Friday. But yeah, here's Webull right here, which is literally this app, this brokerage right here, publicly traded. And here's what's really cool about this app specifically. Actually, they just brought back, they just brought back crypto trading. But then there's also, I don't even know if I'm going to be able to find it. They brought prediction markets onto Webull. Oh, it's right here. Yeah, look at the very middle of my screen. New prediction markets right here. This just got added into Webull. I think that, this is how Robinhood makes a bunch of money right now. This is why Robinhood has legit 10x'd in the past 2 years here, 3 years. They entered, instead of just selling, whenever you go buy and sell a stock on a brokerage, I'm on Robinhood, I go buy a share of Apple, sell a share of Apple. They barely make any money on that, like a fraction of a cent. But whenever you go buy crypto or sell crypto, that's where they make a juice of a margin in a transaction fee. And also on this down here, the prediction markets, whenever you go do a transaction on these, they make tremendous fees. So that's where they're making the money right now. And Webull just now got into this, and I'm thinking that maybe that could be a bit of a bull case for more future growth. Like if you go to the revenue's up 46% year over year. It might continue to climb more. They're still very choppy on the net income, but honestly, actually, you know what? I'm going to re-add them to the top of the watch list. I do actually like this name. What's the market cap? Yeah, $5 billion. I do like them. Sorry, I'm drinking my water here. Okay, Qualcomm. Yeah, dude, Qualcomm owns a bunch of patents. I actually learned this from the Morningstar research. So did you know this? Check this out. If we click on Morningstar research right here, check this out. This is what the bulls say, the very first line here. Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it owns many of the essential patents used in these networks. So they're collecting a bunch of royalty revenue, apparently, which is cool. They traded a fair multiple, 17 times PE. Again, the PE ratio is just the price to net income plus any share buybacks or dilution. And check this out. Yeah, so one thing that's been struggling, I think Apple is like no longer using Qualcomm chips, or maybe it was an Android or something. I think they own Snapdragon, and like some Android isn't using it anymore. Samsung, I don't know, but their smartphone chip market share went from 30 to 26. So their market share did fall a little bit, but that's probably why their multiple's so low. That's why they're trading at 17 times PE when the industry average is like 40. But this is why I like this one, and I'd absolutely add them to the watches as a dividend growth play. Great dividend growth name. Check out the dividend. They have a 2% dividend yield, and the payout ratio is only at 36%. They have so much room to raise the dividend, fair payout ratio. But check this out. So what are they doing with these growth rates are great. What are they doing with 2.5 to 3 billion of net income every quarter? Well, again, since the dividend, they pay a dividend, the dividend only costs 900 mil. They have so much leftover money. They're plowing money into share buybacks. They spend double the amount they spend way more money on share buybacks than they do on their own dividends. So here's what share buybacks do for you as a shareholder. If we go to the net income is up by 25. But the net income per share is up by 29. Again, whenever they buy back their own shares, it forces the EPS to go up higher, which forces the PE ratio to go down. It literally makes the dividend cost less because there's less shares to pay dividends to, and it gives you more ownership in the company. So in short, whenever a company buys back their own shares, it forces the stock to go up. And this company has bought back legit 4%. They bought back 4% of all the shares the past year, and you got a 2% dividend. Talk about a shareholder-friendly company. You get a 6% shareholder yield, then you're hoping for a couple percent every year in stock price appreciation. That should hopefully put you above the S&P 500's yearly returns. What software is this? Oh, yeah. Hey, what up? David said, is this live or pre-recorded? This is pre-recorded. Yes, sir. But yeah, if you want to get the software I'm on, by the way, this is a brokerage, where you get stocks on. It's in the link tree in my bio, that first link there. Mr. Phil said BTM stock. So Bitcoin Depot, actually, that's what you meant earlier about Bitcoin Depot. I wasn't sure what you meant right there. But they're a stock. Check that out. So they're a $200 million company. So the whole company's worth 200 mil. Bitcoin ATM kiosks. No way. So I feel like I've seen these before, but I've never actually used one. America isn't the place for really crypto transactional uses yet. It's really in like Brazil and like South America, other countries where they use crypto for transactional purposes because our currency is actually good. But let me see. Okay, so yeah, 100% of the revenue, it says, does come from the United States. But here's what I find fascinating. And you know what? I'll actually put them on the watch list just for this because I'm sure whenever you go withdraw Bitcoin from that ATM, they're collecting a high fee. They're net income positive. They're making 5 to 10 to 15 mil of net income a quarter. They just deleverage their balance sheet. I mean, if this is, let's see, that's real. They're really making this 12 mil of net income a quarter. I mean, that's interesting, So the multiple, what's the PE ratio on this? They're trading at, let's see, PE. Why does it say negative PE? Did they have like a little EPS? Oh, because they just so they've diluted you so much. Whoa. They've diluted you so much that even when they're 5 million plus of net income, the EPS is still negative. So looks like there was a bit of future hiccups, or past hiccups. I mean, oh, well, interesting though. The fact that they're making net income every quarter is interesting, but they're not. EPS positive consistently. Hey, Vanka said shop stock. Yo, that's a big Kathy Wood stock right here. Where's Kathy Wood? Kathy Wood portfolio. She has Tesla, Robinhood, and then she owns a lot of Shopify. And they hit an all-time high. They deserve to be at all-time highs. I used to have a Shopify store, and I paid for the highest subscription. Even if you pay for their highest level subscription, you still pay. You still have to give them 0.25% of every sale. So like this company literally just collects royalties in short, but this is a growth company, like growth e-commerce company. Check out the annual sales growth. This is what's phenomenal. It literally just hits a new record of revenue every year, every quarter. That's, in my opinion, what I love about Shopify. And they're not just growing their top line, but also the bottom line, like the free cash flow down here. They're printing a couple $100 million of free cash flow every quarter. They had a little one-time adjustment last quarter because they sold something, but they're making net income every quarter. Like Shopify, I love them. They're overvalued here, I guess, but they deserve to be at all-time highs. What app are you using yet? What? Hello? Yeah, hey, if you want to get this is a brokerage, it's a software where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, the very first link there. It's called Moomoo. Yeah, it's not called. I also have Webull linked up there. Yeah, I do have a Webull account as well. Yeah, I'm not sure which brokerage you're talking about. I got all the brokerages up here. These are all brokerages are just apps where you buy stocks on. They ask for a bunch of information. You get a tax from every year. If you want to buy stocks, you need a brokerage, not financial advice. I'd get this one right here. It's in the link tree in my bio, the very first link there. It's free, costs nothing, no commissions at all, and it has the best useful analysis tools. Oh, Jimmy, dude, that's not cool. Try not to spam there. Sorry, man, I gotta mute you. But let's see here. What is the, yeah, hey, oopsie, I just typed in the link wrong. There you go. If you're on YouTube, it's in the link in the description. But let's see. Ooh, what star should we hear? I wish Webull allows crypto transfer. Oh, that'd be interesting. Michael said IONQ. Oh, wait, BKNG. Wait, Booking Holdings for a seasonal play? Yeah, Booking Holdings, this is your travel play. This stock has just been a monster performer. They just started paying a dividend too because they're so profitable. They're making so much money now. Let's see right here. Yeah, hey, Pog, it's the link tree in my bio, the very first link there. It'd be that one. But yeah, check out the revenue growth on Booking.com. It's great. The revenue's up 12% year over year. And check out the net income. They made $2.75 billion in net income. And that was after paying that's after $1 billion or $800 million of taxes. So they made $2.75 billion just this quarter. They print money. And the best part is actually the share buybacks. So if we go to the net income is up by 9%. But the net income per share is up by 13. Look at the EPS. It's $84 per share. Again, it's a $5,000 per share. They'll probably do a stock split eventually, but this is better gross margins than Reddit. It takes nothing to run this company. 98% gross margins. And then Wait, that says 2017. I guess that's old metric, but 2020, their net margin was a 30%. Anyway, Booking's a cool company, a really cool company. IONQ, yeah, actually, I don't love this one at their current valuation. They're certainly overvalued, but they're one of the better quantum names that if I wanted to bet on one, I'd pick this one, but I still wouldn't buy them. But Q3 earnings preview. Oh, so they report earnings soon on the 5th. Projected revenue at 27 million, EBITDA loss of 124 mil due to R&D and acquisitions. Yeah, that's actually one thing I love about this stock. So one of the things I hate about all the quantum names is how they all have no revenue. If we go to the revenue on IONQ, this one has a little bit of revenue, but they actually, 20 million, they took advantage of this momentum. They diluted the shareholder by $1 billion. They literally diluted you by $1 billion, but they bought a company for $1 billion. They literally bought a company. So they're going to have some sort of new assets. I don't know. I just some quantum momentum name. I wouldn't really trust a lot of money with that one, but they're certainly interesting. Young Mar said MA stock. Yeah, MasterCard. Let's do it. Another great one. Yeah, we're not really going to cover GameStop. That's, GameStop, they just don't, no real fundamentals there. GameStop's a momentum play. You're not buying them for their fundamentals. It's your hope Roaring Kitty tweets something. Yeah, hey, thanks, Skelly, for the 15 roses there. Yo, Skelly, I didn't even see that. Thanks so much for that. But maybe we'll cover GameStop later. But here's MasterCard right here. This is a phenomenal company. They have a shared oligopoly with Visa. So, the small little credit card transaction fees that are slowly bankrupting us are making MasterCard a lot of money. If we go to their after-tax net income, they're printing money. Legit it's nearly $4 billion of net income just this quarter. So they're making $3 to $4 billion in net income a quarter. I heard other people say they like MasterCard more than Visa because they're more of an international play, because the US is only 30% of MasterCard's revenue. So that's one thing people like. But look at this net income. They made $4 billion or $3.93 billion in net income this quarter. They have a dividend. The dividend only cost $680 million. So what are they doing with all their leftover money? This is the crazy part. This is why the stock doesn't go down. They legit spend $2.5 to $3 billion on share buybacks every quarter. And here's what it does for you. Again, the net income's up by 20, but the net income per share is up by 23. So that makes the EPS go up more than normal, which makes the PE ratio go down. There's less shares that exist, gives you more ownership. I just love buybacks. Do you care most about dividends or growth? More, I focus on total return. Yeah, total return's the best thing. So let's check out GameStop for the fun of it. Let's do it. So GameStop, yeah. Every time the stock rallies, they dilute you. That's why every time there's an actual rally, like they gap down so aggressively on dilution. So I'll show you that right down here. So if we go to their cash and financing activities, every quarter this year, if you average it out, they've diluted you by over $1 billion every quarter this year. And what's the whole company worth? The whole company is worth $9.9 billion. You're not going to believe this. You know what? Here's the one thing I'll say. And again, if you're a real investor like me who looks at fundamentals, you care about this, but the average, GameStop investor could not give two flying flamingos about this. But look at this right here. If we go to the total common shares outstanding, the dilution is insane over here. So those are the total common shares that existed. There used to be in 2020, there was 65 million, then there's 303, now there's 440. It's a tough one, but you're buying them. Actually, if we go to their revenue right here, if we go to their numbers, the sales, the lifeblood of the company, they've been on a nasty decline of revenue. So again, you're not buying them for the fundamentals. You're buying them for, actually, if you're wondering how are they net income positive, that's because look at their cash on hand. If you look at the top right, they have $8.7 billion of cash. So every time they're diluting you down here, this is the cool part. Every time they dilute you, they're buffing up their cash position. So they legit have $8.69 billion of cash. And that cash, earns interest. Let's see. They legit made, where is this? I can't believe it. They made 79 million of positive interest. Remember, this number right here if you have debt, it includes the negative interest you pay on your debt. But this company has such an abundance of cash. They made 79 million of positive interest on their cash this quarter. So they're worth 9.98 billion. They do have like $1 billion of debt. They have like a 2 billion net cash position. Anyway, GameStop is interesting. I wouldn't trust them with real money or anything meaningful, but they're a certainly fun swing trade kind of stock, No problem there, Rev. Yeah. Can you buy partial shares using Webull? This is Webull right here. you can. So I actually do that. Like Progressive Corp, I have 4.15 shares. Actually, with all three of these brokerages, all three of these apps, you can buy fractional shares on all three of these. Like McDonald's, I got 17.07 shares. Don't be scared to buy fractional shares. I know some people just like having the psychological whole share, but it really doesn't matter. Whether you own like before, it's like Amazon before their stock split adjustment. Whether you own $100, like you own $100 of the stock, whether it's 0.1 shares or one share, you own $100 of the stock, and whether it goes up 10%. Anyway, never focus on share price. Okay, because stock splits and stuff like that. Ooh, hey, what up, guys? Hey, what up, Num2? What up, MVR? MV Run, how's it going, man? Explore the web, what's up? DPRO stock. So this is Dragonfly. I wonder what this company is. So they're not doing too well, but there is some momentum around the name. So let's actually go check out their website right here, dragonfly.com, the trusted name in UAV hardware, software, and sensors. Website's kind of trash, but let's go look at their numbers right here. What is the market cap? So they're worth $280 million. So they're worth so they're a drone play. So look at this. It says 100% of the revenue comes from drones. And look at that. So all the revenue comes from Canada. So Canadian drone play. So no revenue really. I mean, revenue of $2 million. Wouldn't trust real money in this name either. I mean, they're just too much of a startup. If you're looking for a real drone play, pick Axon, I think. Or all right, yeah. Hey, Ratu Taidu said, "What app do you trade on?" Yeah, I trade on all three of these brokerages right here. I have all three of these. But yeah, my favorite one is called Moomoo. This one right here, it's free. Like with Robinhood, you have to pay $5 a month for the features. But like this one right here, it's completely free, costs nothing, no commissions. It's in the link tree in my bio, the very first link there. Full disclosure, it's an affiliate link. All the links up there are affiliate links. So if you go like deposit $100, you'll both get like some free stocks. Yeah, 2 million. With 2 million of sales a quarter, it's hard to really trust that name. So that's the only thing that I would. Where can I get my hand in IPOs? Yeah, hey, well, here you can click the IPO thing up here. What's the or I don't know what recent IPOs are coming. I don't know. What's the most recent meme stock? I don't know. Probably Beyond Meat. Well, like that. Beyond Meat has been all the hype. Well, actually, let me check the US heat ranking right here. Let's see if we can find one. RXRX. Oh man, that one's trash. Riggedy Computing, maybe a quantum name like Beyond Meat. Yeah. I don't know. Okay. Ooh, Bullish Boxers. What up? He said VIVK. What's this one? VIVK. So this is Viva Core. Yeah, hey, we're not gonna cover this stock, sadly. If you got another stock you're going to look at, let me know. But if you look in the very top right, the market cap, they're only worth 28 million. So they're at an all-time low, and they're only worth 28 million. Wouldn't really trust this name right here. And think about this logically for a minute here. Their whole company's worth 28 million. You could buy the whole company for 28 million. So let's say you buy the company for 28 million. Here's what you just bought. You bought a company that lost you 12 million this quarter, 8 million, 20 million. Like it just loses you a bunch of money every quarter. Do they have sales? They do. Okay, actually that's good. 79% growth in the revenue, but it's tough. It's tough with these net income losses because there might be real bankruptcy risk. I mean, they lost 33% of the entire market cap just this quarter, and then another 50% the previous quarter. And so they've lost more than the entire company's worth the past year in net income, sadly. So, yeah. PLNTR. Wait, PLNTR. I think you mean Palantir, just normal Palantir. Yeah, PLTR. They report earnings on, is it tomorrow? On the 3rd, and today's the 2nd. So literally tomorrow, expect this stock to either go up or down a bunch. We can actually get the earnings preview with Moomoo, which is kind of cool. Let's actually see what they have to say. Strong AI demand and government contracts drive revenue growth. Government revenue expected to rise 48%. Commercial at 48%. So yeah, 87% of the analysts have it as a beat, and I guess a little bit as a miss. But anywho, here's what I love about Palantir the most is because of their government contracts right here. A lot of U.S. police stations, the Air Force, the military, they all use their software, and check out the growth. ICE, sadly, that's why a lot of people don't like this one from an ethical point of view. ICE is using them, but check this out. The revenue is up 49% after it grew 23%, after it grew 15. So like the growth rate is growing over here on their commercial side of operations. And also the commercial side with other S&P 500 companies, that's up 46% after it grew 33, after it grew 15. So it's simple. They're just a growth beast with expanding margins, highest record net margin ever. They had a 33% net margin this quarter, $1 billion of revenue, legit no debt at all, completely debt-free company. With $6 billion of cash. Yeah. I'd love to own Palantir, but not at this valuation. They legit trade at like 150 times revenue. Someone said, how are they public with 20 mil market cap? Exactly. Well, here's the thing. They're worth 20 million. Now they're worth 20. They're 23 cents a share. So if every 23 cents is 28 million, the old stock price was $400. So legit, this used to be a multi-billion-dollar market cap company. But then they just lost too much money and then they went bankrupt. So yeah, they'll probably get delisted soon. Sal, what up? He said RANI stock, Rani Therapeutics. Okay, so another one. Yeah, we don't really cover these kind of names. They're only worth 200 million. Looks like there has been some momentum on the name the past couple of days here, so, saving them from all-time lows. So let's see. The whole company's worth 200 million or 250 million. They have no revenue right now, or the revenue in the most recent quarter was 172K. I guess maybe the expectation is they're going to do 2 million of revenue in 2 quarters. I don't know. There's so much like uncertainty here. They legit have no revenue. Oh, yikes. So look at that as well. Let's see the net income losses. So yeah, whenever you lose 10, 12 mil a quarter, that money has to come from somewhere. So notice the assets are going down and the liabilities are now significantly higher than the assets, when the assets used to be way higher than the liabilities. Look at that. They used to be a debt-free company. Used to have a phenomenal balance sheet, but now they have more liabilities than they have assets. So I can see why that one has been at all-time lows before today. Hopefully there's some sort of good news here causing that momentum. I hope I don't know what that news is, but I wouldn't trust real money in that one, but good luck. Hey, Mr. Phil said SoFi. Heck yeah, let's do SoFi. Just open a Roth on Webull. Hey, yo, nice. Yo, and a Roth IRA. I have a Roth IRA with Robinhood. Actually, I have a Roth IRA with Robinhood because they actually give you a 3% match, which is kind of cool. But yeah, here with the Roth IRA, it's just a tax-free retirement account. Just have it in the most growthy assets that are not growthy as in like risky, like growthy as in like, will return 7 to 10% a year, like the QQQM or the S&P 500, the VOO. So anyway, here's SoFi right here. Actually, I do own SoFi as well, full disclosure. I'm up, I think I'm up basically almost 5x. I'm pretty much up 5x on SoFi. I regret every share I've ever sold on SoFi. But here's why SoFi isn't just propped up on momentum. Hey, Brady. Yo, my bad there, Brady. Yo, we'll get to TMDX after this. So sorry if I don't get to every stock here. I've just been so busy with all the stocks here. But yeah, we'll get to TMDX right here. By the way, if you have a stock you desperately want me to look at, I will more likely see it on the YouTube stream than TikTok. I'm streaming on YouTube and TikTok right now. The best way to support me is to subscribe to my YouTube channel. My YouTube channel is called Nathan Robert, but I do try and read all the YouTube chats first, then TikTok, because I'm trying to build on my YouTube channel. I barely get any viewers on YouTube. So anyway, best way to support me is just sub to the YouTube channel. But anyway, let's get to by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I sell nothing, no course. I'll never follow you, DM you. The only thing I do have is a YouTube and this one TikTok. Okay, so here's SoFi. Again, not just propped up on momentum. It's a great quality, fundamentally sound company. They're growing from their fintech business. Yo, try not to spam in chat there. That's not cool. Yeah, hey, we're gonna get to TMDX after this. But yeah, look at this on SoFi, their financial services revenue. This is incredible, the growth. It's up 105%, after grew 80%, after grew 250%, after grew 260. Like they're on an absolute streak of growth. And this growth, no analyst expected that. We can actually see the analyst expectations. That's this orange line down here. Every quarter they beat on revenue, every quarter they beat on EPS, and every quarter they beat on EBITDA. And that's, in my opinion, what's going to sustain this rally. That's the reason they gap up on earnings day, is because they had so way better earnings than what the analysts thought. That's why I think people are just starting to really take SoFi serious. They're super growthy on the revenue. They're doing over 100 million in net income a quarter. So SoFi is a beast of a name. I certainly wouldn't touch it here. It seems a bit, even now, overvalued. Let me actually check the exact. Let's see how expensive they are. At right now's price, they're trading at 80 times next year's net income. So again, it's a tough buy here. And I bought them, I'm up 5x on them. I bought them way lower, but they're trading at 80 times next year's net income. They deserve a high premium. Yeah, we bought all our SoFi shares like down here on this day right here. Those are little buy orders. But anywho, yeah, SoFi is cool. Same with Robin. Like some of these stocks, I regret every share I've ever sold off. Like Robinhood, check this out right here. We have 5 shares in them. We used to have like way more. We sold 50 shares at $36. Like we did some stupid things. Like sometimes your biggest regrets are selling out of the most highest quality stocks that you don't realize that will continue to climb higher. Good job so far what I've listened. Hey, what up, Mark? I appreciate that, man. Is this app available in the EU? No, I don't think any of these are, sadly. I don't know, though. Maybe I don't think so. Still a good buy, SoFi. Yeah, SoFi, definitely a great, like if you have the intention to never sell, like if you plan to never sell SoFi, it might be worth nibbling. Like if you want SoFi as 5% of your portfolio, you don't make it 5% of your portfolio today. And again, none of this is financial advice. I'm not an expert. But it's 80 times next year's net income. It's a tough buy, but meaningful buy. Okay, let's get to PayPal right here. This one is kind of like a way smaller, they're a way bigger version of PayPal's a way bigger version of SoFi, but way less growthy. If we go to PayPal, sadly, even after this rally, PayPal's the same price as they were back in 2017. That's because they just grow single digits. If we go to their revenue, the lifeblood, the sales of the company, it's up 7%, 5%, 1%, 4%, 5%. So single digit growth rates, we kind of want to see that improve. But this quarter specifically was a good quarter. It was a triple beat. They beat on revenue, they beat on net income, and they beat on EBITDA. So it really was a triple beat quarter. And again, this is probably a fair multiple. Actually, this is probably a little undervalued. I feel like this could probably go up to 15, 16 PE and send this, probably to $80, close to 100. They just started paying a dividend as well, but they trade at 14 times net income. That might be fair for a company that grows at single digits and all. And they kind of don't really have a moat. Or I give PayPal a lot of transaction fees, and I hate it, but this is the best part about PayPal, though, why I actually like them. They do so much in share buybacks. If you look at the very top here, that's all the money they're spending buying back their own stock every quarter. Again, if this number was positive, that means they're diluting you and issuing shares, but no, they're buying back over $1 billion of their own stock every quarter. And especially at this undervalued price, that could make great returns for the long-term shareholder. And check out, here's what the share buybacks do for you as a shareholder. If you go to the net income grew by 24%. But the net income per share grew by 31. I remember the net income growth rate and the EPS growth rate should always be the same. The only thing that changes that is the share part of the ratio. So that forced the EPS to go higher than it normally would have been, which makes the PE ratio go down. So actually this PE ratio, again, the PE ratio is the price to net income plus buybacks. The price to net income is probably much higher on PayPal than 13. Just because, again, PayPal's cool. But I don't know if I expect them to really outperform the market in the long run. I feel like, PayPal in the past year has done like $8 billion on share buybacks. I feel like PayPal should buy a company, buy another Honey. All right, they might have created Honey and they might have created Venmo, but, buy another Venmo, do some sort of acquisition. I think PayPal's in a unique position. And actually, they've actually been so boring they don't know what to do with their cash that they just started paying a dividend. So there you go. Hopefully that was helpful there. Ooh, Jeff Mack, good to see you, man. It's been a minute. Hope you're having a great day. Let's get to that one right there. So Sony stock, they're actually a Japanese company. Jasper said NG Con. Hey, give me the ticker symbol. Levi stock. Hey, we'll look at Levi's after this too. So here is Sony right here. Do you do options? I actually do not do options. I haven't done a single option in over a year, actually. I'm just not good at options. I tried it and I just didn't do good at it. Oh, actually, oh my goodness, Brady, I'm so sorry. We'll get to TMDX right now. Dude, I just keep skipping past all these stocks. I just forget, so I'm sorry. But here's Transmedics right here. This app is telling me that there is what is this analysis right here? That there is a bullish symmetrical triangle and the rise probability is an 85% chance. As you know, that's technical analysis. I like looking at the actual fundamentals, the financials. Oh, and it looks like they just reported earnings. Liver revenue grew 41%, heart revenue increased 14%, lung increased 5%. So yeah, their main growth driver is actually their liver replacement therapy revenue. Check this growth out. There's people drink too much, the liver, whatever. But look, the revenue's up 50%, after grew 135, after grew 240. This is a nice streak of growth. And that's why I actually really like this name. Is there a short thesis on this name? Let me see. Oh, wow. So did you know this? 24% of all the shares are being shorted. So there's some sort of major short thesis here. I'm not sure what it is, but I actually would put this one on the watch list because like numbers don't lie. That's great growth. So the liver revenue, is up 50%. Let's check out the heart revenue. I think they said 15% growth. Yeah, so that's up 14% year over year, also to a new record. But if we go to the net income, they're actually net income positive. They're making good. These year over year growth rates specifically are insane. They're making good net income every quarter. No dividend, but that's all right because they just got net income positive. What about FCF? Yeah, free cash flow the past 2 quarters. These year over year growth rates again are nuts. So I like them. There's some short thesis that I don't know. I actually used to own this stock, and I remember I read some sort of I don't know, like some non-proprietary. I don't know. There's something there. But anyway, they're cool. What app is this? Yeah, hey, by the way, this is a software. It's a brokerage where you buy stocks on. If you wanted to get it, it's in the link tree in my bio, the very first link there. So Levi stock. I think they're one of the, they sell jeans. So this company just sells a commodity, jeans. But let's see, that's why I don't really expect this company to really outperform the market in the long run. But you mainly buy them for the nice dividend. Check that out. So you get a 2.61% dividend. They're saying the payout ratio is a 96% though. Let's go verify that. Here's how we can check for ourselves what the dividend payout ratio is. So we go to the net income. Again, that was based off the last full year. So that was probably including these 2 trash quarters. But now the net income has really rebounded. Actually, let's average it out here. Let's say they make 180 million in net income a quarter. So let's say they make 180 million in net income a quarter on average for the past year. And look at that. The dividend only cost 55 million. So they actually can afford the dividend. Again, that payout ratio is off the last full year. So anywho, they trade at 13 times net income. That's probably fair for a commodity, it's selling jeans. But yeah, there you go. Yeah, if we go to the revenue, single digits, 6, 6, 3. So again, you don't expect them to outperform the market in the long run. I probably, nothing's really blowing me away there. I probably wouldn't buy them. But it's not like the end of the world. They're just like an okay kind of meh stock. Hopefully that was helpful there. Should we buy Meta now or wait for a deeper dip? Yo, if you have the intention like me to never sell, I think Meta's worth buying the dip on right now. I'd nibble on it. PE, yeah, hey, the PE ratio is the price to net income plus any buybacks or dilution. But in simple terms, like if we go to Coca-Cola Consolidated right here, if we go and you look at the PE ratio is just the price to net income. Or it's actually the price to EPS. Here's what it is specifically. PE ratio is the price to EPS, and the EPS is just the net income per share. So it's the net income plus any buybacks or dilution multiple. I probably worded that weird. I apologize and made it sound weird, but okay. Have you looked into APLD? Yo, Raphael, or wait, Roll. Yo, sorry. YouTube just changed it. So where like I see your whole usernames and not like your actual name. So sorry if I'm saying your name wrong, but what up, Roll? He said APLD. Let's check it out right here. So this one is actually in the Nvidia portfolio. Nvidia owns a lot of CoreWeave, and they also own their second largest holding is actually APLD. Again, just because Nvidia owns a stock doesn't mean you should always go do your own research on it. Hey, Natalie, no way. I didn't even see that. Thanks for the gift there, Natalie. If you got a stock you want me to look at, let me know. I got you. But check out APLD right here. They actually just reported earnings, and the earnings were good. This is why they gapped up on earnings day. We can see what the analysts expected. They expected 45 mil, but they reported 64 mil, a huge beat. And not just on the revenue, but also on the net income. Analysts expected them to lose 13 cents. They only lost 7 cents. So it really was a good quarter. They're a data center hosting business, high performance compute. So they own a bunch of GPUs. So I wouldn't buy them here. 55 times revenue. It is expensive. It is expensive here, but they probably deserve a high multiple for the high beating on expectations. Nvidia owns them. So that's interesting. All right. Can you look at SIG? Oh. Did I just log out of my account? What in the world did I just click? I mean, hold on. I actually have to hide my screen here while I log into this. I don't know what I just clicked. Oh, did I get hacked? Hopefully no one hacked me or something. Oh, dude, I forgot. They just sent me a text to my phone number, and my phone number isn't even on this phone. Okay, 41. Oh, let me not say that out loud. Okay. We're good. Okay. Okay. Yeah, I don't know what just did that. Oh, and that even, I closed out of my screen Apple Play. By the way, if you want to hit the follow button, we stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram, Discord, nothing. Or I have nothing like that. I'll never follow you, DM you. Okay, so let's see here. We're back. Sorry. Yeah, what app is this? Yeah, this app right here. Again, this is a brokerage. This is where you buy stocks on. If you wanted to get this app, it's in the link tree in my bio, the very first link there. It's an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get like a free stock of a free little fractional piece of Nvidia, I think. So hey, it helps us out. But anyway, here's Rocket Lab right here. There's a lot of space stocks out there. This is one of my favorite space stocks because they actually have real fundamentals and real growth. They actually just secured some contracts with NASA and JASPA, or the Japanese version of NASA. But check out the growth of their space systems business. That's what I like about them. The revenue's up 27 after it grew 94. So they're on a streak of growth that's at literally a record, and not just on that business, but also the launch services. It's at a record, up 58% year over year, literally to a new record. So they're on a streak of growth on Rocket Lab. Beating on expectations. The analysts expected 135, they did 145. So while I still watch their net income numbers, they still lose 50, 60 mil in net income a quarter. But as long as they can keep up that growth, I like them, and they'll probably continue to do good. But I wouldn't buy them at this valuation. They're certainly really overvalued here. Too late, buddy. I have your identity. Oh no, Loop has got me. What's your professional background? Hey, I don't got one. I'm a college student, so yeah, I'm not an expert. Don't take anything I say seriously. None of this is financial advice. Hey, what up? There's so many stocks I want to get to. MRVL, Marvel, I think, is about to report earnings, or did they already report earnings? So I remember watching them the day they reported earnings and they gapped down. I said, potentially buy the dip on this one because of their next quarterly expectation. Check this out. This is what's crazy. So the EPS this quarter was 22 cents. And that 22 cents of EPS is the same as 194 mil in net income. What happens is, hey, by the way, this is a brokerage where you buy stocks on. If you wanted to get this app, it's in the link tree in my bio, very first link there. You get a tax from every year. They ask for a bunch of information. People were asking about that. Why are they asking for all that? Yeah, it's a brokerage. If you make a bunch of money on a stock, you got to pay taxes on it. So yeah, if you want to get this brokerage, it's in the link tree in my bio, first link there. Sorry. But check this out right here. If we go to the EPS expectations, it's going to literally, again, that 22 cents this quarter is the same as 194 million. They're expecting them to do $1.36 next quarter, and then 44 cents. So the net income growth is expected to be massive, as Ninja would say. But look at this. This is why this was a tough buy a year ago. No one bought this stock. They were burning through a couple hundred mil in net income a quarter, but now it looks like they're consistently making real net income numbers, and it's supposed to even be crazier next quarter. So this is one of the cheapest chip plays out there. When you do a forward multiple on this name. So there you go. CoreWeave. Let's go ahead and cover CoreWeave. You haven't looked at them yet. They got a great deal with Nvidia, where Nvidia is now going to buy their unused capacity of chips, which is pretty crazy. So let's check out. Is there any weekly news? CoreWeave acquires Marimo to enhance development platform. They also just bought CoreZ, or I don't know if they officially bought them, but they are buying Core Scientific, some Bitcoin mining company. But check this out on CoreWeave. This is the main thing I like about CoreWeave. The one thing I love is how growthy they are. Again, they just IPO'd, so there's not too much data. This is all we get, but the revenue literally, as you can see, just hits a new record every year, every quarter. It went from 300 mil to 1.2 billion. So 1.2 billion this quarter, it's at a record. Check out what the analysts are expecting. And in 2 quarters, it's supposed to be 1.8 billion. Like, the revenue is supposed to continue to keep on climbing higher and higher. Again, unfortunately, they're still losing a bunch of money every quarter, but that's what's so cool about CoreWeave. And Nvidia is like a inherent call option on this one. Nvidia doesn't allow the stock to go down. So yeah, pretty cool. CoreZ shareholders reject CoreWeave $9 billion merger, so maybe they won't acquire that Bitcoin mining company. I actually would prefer them not to do that, but cool. All right. Talk slower. Yeah, hey, sorry if I'm talking too fast. You got to have a tutorial to start understanding all this because I'm trying to follow when it's hard. Yeah, hey, my fault there. Yo, I actually do have a YouTube video. I made it about a month or two ago. It's called How I Analyze Stocks. And I kind of go over all the same metrics that I do whenever I analyze a stock. I mainly just tell you what everything is. I tell you what's the important of the cash from operations versus cash from financing versus cash from, or the cash from investing versus cash from financing activities. Oh, I can give you a quick lesson on this. If the cash and financing, if this is positive, that means they're either issuing debt or diluting by issuing shares. Cash and investing activities, if a company acquires a business, this quarter, they sold $14 million worth of land. I remember reading about that. So that's, if this is positive, it means they're selling out of their assets, and their cash from operating activities is the money they're making before, this includes the money that they pay taxes on and interest. There's more to that, but check out the video I made if you want to learn more about that. And actually, I got to go here in about 10 minutes. I feel so bad. But by the way, if you want to hit the follow button, we stream every day. This is actually our second stream of the day. But dude, don't try not to spam there. That's not cool, man. I got to block you or not. Okay, let's see here. Let's see, Nokia stock. Hey, I think Nokia just took a bit, or Nvidia. One thing I found interesting about this is, check this out. If we go to the weekly news, it's not over here. Or Nvidia right here at the top. Nvidia acquires $1 billion stake in Nokia for strategic AI telecom business or whatever. So yeah, that's pretty cool. Actually, let me check out the earnings hub. Whoa, I like seeing what AI says. Network infrastructure grew 11% year on year, benefiting from increased demand in AI cloud. Optical network segment achieved 19% revenue growth. AI cloud partnerships now contribute 6% of group revenue, supported by new semiconductors. Okay, well, cool. So I did, if we go back to the monthly here, this is a trash looking performance. Nokia is technically, or it is the same price that it was back in, what is this year? 1997. So you bought the stock in 1997. It's the same price that it is today, but they had a little gap up on earnings because it was good. They beat on revenue, they missed on net income, and they beat on EBITDA. So there must have been some little one-time adjustment to their EPS. But anywho, mainly the reason they gapped up so much is because Nvidia now owns like a couple percent of them, like 5% of all the shares. Nvidia, that's crazy. Oh, wait, I forgot to get to this one. SIGA stock. So SGIA, they're a $500 million company. Let's check it out right here. Ooh, marathon a buy? I don't think so. Is there any good analysis websites if you don't have a Moomoo account? Yeah, stockanalysis.com. I love that website. It's free. Just got here. Do you think gold will rise or have a crash? Gold is interesting. Depends on the escalating tensions, I guess. But let's see. Risk reward on gold doesn't look great. For gold to double from here, the whole entire gold market is worth 24 trillion. For it to double, it had to be worth 50 trillion. Let me not talk about gold though. Here's SIGA Technologies. They're worth $590 million. So they're a $590 million name, and yikes, look at that. They're kind of the same price as they were back in 2018. But someone asked me specifically when we look at the stock to look at their net cash on hand. So let's go do that. So remember this market cap up here as we go and do that. The whole company's worth $590 million. And yeah, look at this balance sheet right here. The whole company's worth $590 million, and they have $190 million of cash on hand. So literally 30% plus of the entire market cap is just their cash on hand. And if we go to their net income, if you kind of, is that real? That is real. So it's a little choppy, but it is real. Those are after, this 35 million is after paying 10 mil of taxes. If you average it out here, they're easily making like 10 to 20 mil a quarter. Or like 18 mil a quarter. Where's the revenue come from? 83% it comes from the US. Their business is sale of the company's oral and IV TPOXX, as well as research. So it looks like some sort of a medical product protecting humanity. Some sort of prescription. And that, again, there's probably some concentration risk. But again, that net cash position, the fact that they're making net income every quarter when we average it out, actually, I like that name. I really like it. Nice one there, Celebrate. All right. Thank you for what you're doing for us. You know what? Hey, thanks, MVR. Appreciate that. Thanks, man. Hey, what up, William? He said, take a look at NOW, please. Yeah, ServiceNow, they just reported earnings. Let's actually go see what, I like seeing what AI has to say. Let's go see what the earnings hub is here. So subscription revenue grew 22%, driven by strong demand. Professional services increased 33%. That's great. Operational efficiency improved with non-GAAP margins of 33%, surpassing guidance by 3%, and free cash flow margin of 17%. Customer acquisition remained strong, and 103 deals over $1 million in net new ACV, and 553 customers exceeding $5 million annual. This is great news. Let's go check out their numbers. I've been saying recently, I honestly like ServiceNow more than Salesforce stock at this point. If we go to their net income, this is great numbers. They're making the valuation is still high here, but they're making easily $300 to $500 million net income a quarter. These growth rates are good. They got the subscription revenue. We can go to the FCF, which is free cash flow. It's super great. Again, these year-over-year growth rates are so good. So again, overvalued here, maybe not crazy overvalued, but what's the price to net income? Yeah, price to sales of 15. Price to net income of 111. So yeah, this is Salesforce is cheaper on a PE, but this one might be the more high quality pick. I don't know. This one I really like, but I don't love them at its current valuation. I probably nibble on it right here. Jay said it looks like I should go all in on SoFi. Hey, I would not, as much as I love SoFi, and I'm probably more bullish on SoFi than you. I wouldn't make it as I love having a diversified portfolio. You know, the best thing to have in my opinion is to have a portfolio of a bunch of SoFi conviction type stocks. You know, you find a bunch of stocks you believe in the future just as much as SoFi, and then you it's like you're investing in a bunch of stories, and then you put more money into the stories you believe and trust in the most. So. Okay, yeah, that's why it's okay to have some like small positions, like fun money positions, like where's my like super micro PSIX, Clear Secure. These are only $400, $500 positions because I don't want them to be more than that. I love their fundamentals, but yeah. Anywho, let's keep going here. Hey, what up, Adam? I appreciate that. Now, Barella, no way. Barella, good to see you, man. I think it's been a minute. He said DGXX. This is a DigiPower. So they're a $270 million market cap. And look at the momentum that they've had the past couple of weeks here. This is great. So congrats if you own this name. Is there short interest? Just for fun, we'll check over here. So no, only 1.5% of all the shares are being shorted. Oh, wait, so cryptocurrency mining. Looks like that used to be a big portion of their business. Now it's kind of trended down a little bit. Sales of energy and electricity and co-location services. So I don't know what this company is. It engages in cryptocurrency mining and hosting solutions. So what we're seeing, and we've seen this with a lot of Bitcoin mining companies recently, or like Marathon and Hut 8, these are basically companies that own a bunch of GPUs. They own a bunch of GPUs, and historically they've just been using it to mine Bitcoin, but now they're converting it into servers and hosting. And this is bad. So the revenue's down 12%. They're losing net income every quarter. Okay balance sheet. You know, nothing's really blowing me away here to really want to buy this name, but the momentum has been quite nice on this one. Probably just following the momentum of CoreWeave and Iris Energy. You know, it's kind of just does the exact same thing Iris Energy does. So Cola, anyway, there you go. 100% of the revenue comes from Canada. All right. How do you know when the right time to sell is? When I no longer believe in a stock. You know, like DocuSign, man, I love this stock, but I ended up selling out of all my DocuSign because I no longer believe in the story of the future. I was up 80% on them when I sold them. I sold them for a nice profit, and I didn't feel great about selling them. Like I wanted to keep them, but just like when I no longer believe in them anymore. So let's look at Corning right here. So this is kind of a competitor to Amphenol stock. Oh yeah, there's Amphenol and Corning kind of overlaid. As you can see, they rhyme together, like they both bottomed down here at the same time, and then they trended up together. So these are both great AI data center beneficiaries. So yeah, the main growth has been from the optical communications. This doesn't include the most recent quarter, which has another even higher number than this, but it grew 40% year over year. But look at what they're reporting versus what the analysts are expecting. They beat on revenue. Actually, last quarter was the good quarter. This quarter wasn't so much. They beat on revenue, missed on net income slightly, and missed on EBITDA slightly. So let me remove Amphenol stock. That they still did great because they had good guidance. Actually, let me see. Let's go to the earnings over here. What did they say specifically? I do want to read here. Optical communication sales grew 33%. Automotive segment declined 10%. Um, I'd rather own Amphenol than this stock right here. I mean, if I was going to buy a stock at all-time highs, I'd much rather probably go with like an Amphenol right here. This is your main like best play out there. I mean, I'm so bullish on that name, like from the CommScope acquisition and the Textron acquisition. Like, this is going to go higher probably. I wouldn't buy it here, but I'm going to buy it here probably, or buy more of them. I think gold has found its current level. Let's look at gold right here. So if you're looking for exposure to gold, my favorite way to get exposure to it is through ticker symbol IAU. It's literally the commodity price of gold just in an ETF, and it's cheaper than owning physical gold. Whenever you go, especially in smaller quantities, you're really getting bent over. But whenever you go buy physical gold, you're paying the spot fee when you buy and sell it, and especially in smaller quantities, you're paying a lot more premium. But with this ETF right here, you can buy as much as you want. You can buy and sell it. And when you buy physical gold, if you're buying a meaningful amount of it, you got to go pay for storage, got to pay to keep it safe. So IAU is arguably like almost like a better play. I mean, unless the world just collapses and you want to own physical gold, but like electricity goes away. But this ETF is a great one, I think. Let's see here. BEPC next. All right, well, people have been saying BEPC. Brookfield Renewables. Okay. There's Brookfield Asset Management. That's probably the largest shareholder. Let me see. Yeah, Brookfield Asset Management, Brookfield Wealth Solutions are the largest shareholders here. But let's check them out. And let me check out their website too. So it operates through its hydroelectric, wind, utility, solar, distributed energy and solutions. So just some sort of, clean energy play. Okay, they don't have a good website. But let's check out their numbers right here because that's all that matters right here. And does all the revenue come from the US? So all the revenue comes from the US. And I like how diversified that this is. Look at that. 56% of it is their non-controlling interest. Then hydroelectric is 38%. How's that doing year over year? It's up 21% year over year. Not too shabby. Utilities, solar, that's down 3%. Well, let's go to the total revenue right here. The revenue, when we combine all the businesses, the total sales are down 3.7. Dang, last quarter was down 19. And the net income was negative. They're having some one-time adjustments to the net income. Like the net income looks super, super choppy and weird, but when we go to the operating profit, it's way more consistent. They're actually making around 180 to 200 million of net income a quarter. So if they're making let's just say 180 million in net income a quarter, let's go see how much the dividend cost because let's see here. The dividend cost, that's weird. Did they just cut their dividend? Or did they? I don't know, man. I wish I could give you more thoughts on them. I'd be careful with that name. All right, we can look at a few more here. When do you think the bull run will be over? We could. I don't think anytime soon. There's no real catalyst stopping the bull rally. That's the crazy part. It could just keep on going higher. Oh, yeah. Hey, the Vinci Latte. You're right. We need to pick a day when we go over the investment themes tab. Exactly right. I've been saying that one day. One stream I'm going to do, and it'll be fun to really watch on the YouTube replay. I might also upload it as a YouTube video. We're going to head over here on this app, and we're going to look for a bunch of new stocks that I've never heard of before. We're going to there's this investment themes where we can view a bunch of different sectors right here. We're just going to look through all these right here. We'll find one from every sector. We'll find a cool drone concept stock. We already know some of these, but just all these cool sectors. We find a cool sector, like a monkeypox beneficiary, a robotics play like Symbiotic, a quantum play, just whatever. Nat gas. There's so many cool sectors. Apparently, these images are some of these images are funny. Okay, we'll look at one or two more stocks. And I gotta go sadly, but if you want to hit the follow button, we stream every single Sunday. PL right here, Planet Labs. I don't remember what this stock does, but I remember liking them. Look at that. They're pretty close to an all-time high. Let me get reminded of what they do again. So they provide daily data and insight about Earth. It offers web, geo platform, and satellite data. Oh, they're literally just called planet.com. No, you're not going to get my cookies. So looks like satellite imagery. or something like that. Let's go check out their numbers because that's what matters. Market. So, only 44% of the revenue comes from the US. So a lot of their sales are outside the US. But look at, actually, this is great news. Probably explains why they gapped up so much on earnings. Check this out. The analysts expected 66 mil. They did 73. And they beat on net income and they beat on EBITDA. Look, they expected them to lose 15 mil. They only lost 3 mil. So it's actually pretty interesting, the growth here on Planet Labs. So revenue's up 20. They're still losing net income every quarter. Yeah, they're losing 20 to 30 mil in net income a quarter. But anywho, I don't know. That they're interesting. Probably not a great price here, though. Yeah, hey, Luke's been saying ET stock. Yo, this is Energy Transfer. This is actually an MLP. This isn't a stock. So beware. This is why I don't really like to cover these kind of stocks because it could mess up some people. This isn't really a stock. You're actually buying units. And this is an MLP, which stands for Master Limited Partnership. And whenever you buy a share of this, you actually get sent a K1 tax form at the end of the year because you're technically a partner in the company. You're not a shareholder. So do beware. You do get the K1 tax form at the end of the year. But because they're formed like that, they have a sustainable, crazy high dividend. You get a 7.7% dividend yield. They basically just own a bunch of natural gas pipelines and just pipelines and stuff like that. So yeah, you're basically buying that to maximize your income. You get the 8% yield. Hopefully you get 1% stock price appreciation every year. So yeah. All right. Timothy said, can we please look at BBAI? I don't really know much about this stock right here. Is there any news in the weekly news? Nope, no news. They report earnings on the 10th. So in literally 8 days, they report earnings. They have revenue. Let's see if they have revenue. So the revenue is down. So they have revenue and the revenue is down 18% year over year. And yikes. So the revenue just lost its growth. The revenue is negative 18%. And they're losing a lot of money, 220 mil, 70 mil, 150 mil. So they just fortified their balance sheet though. So I'm guessing from stock issuance. Yeah, so they just diluted you by 300 mil. Nothing's really blowing me away there. Sales just went negative and that losing a lot of money. They lost in the past year 300 plus million and the whole company's worth 3 billion. So they've lost over 10% of the market cap and net income. I'd be careful about that metric right there. Perimeter Solutions. Yeah, hey, Perimeter Solutions right here. I actually just bought the littlest bit of this company right here. They reported earnings and they got a big contract from the U.S. Forest Environmental Services, like a 5-year contract. It was incredible. So we could see there, and they just beat on expectations. Check this out. This is the reason why the stock gapped up and is at an all-time high. They fell on Friday 9%, but still at a new all-time high from before earnings. Check out what they reported versus what they expected. And it was expected 238. They did 315. Same on EPS and big beat on EBITDA. They expected 135 mil of EBITDA. They did 167. So in full disclosure, if we head over here to our Robinhood portfolio, we have been on this Robinhood wait list for like 2 years. Like they don't like me. But Perimeter Solutions right here, we are up 11% on them. And as much as I love the company, I only have a couple $100 of that stock. So, but they're pretty interesting. If they're a niche industry. They're the number one fire retardant play out there, aerial fire retardant play. They're the only. I don't know the exact term, but it's like the FDA version of environmental things. They're the only allowed aerial. Like, if you ever imagine, like you see those airplanes dropping the red fire retardant stuff in California. They're the only one that sells that stuff. They're the only like ESG approved one or whatever. That's their moat. That's their strategic moat. You know what? I wonder if I could pull up the Discord. Actually, I don't know if I should risk that. You know what? Anyway, I gotta go. I hope you guys have a great rest of your Sunday. We stream every single Sunday, this exact same time if you want to hit the follow button. I sell nothing as well. By the way, watch out for people impersonating me. I'll never follow you. I'll never DM you. I sell nothing. No course book, WhatsApp, Telegram, nothing. So best way if you do want to support me though, the only way to support me, it would mean more than gifting a rose. The best way to support me is just subscribe to the YouTube channel. Hit the follow button on the YouTube channel. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. If you missed anything, you can also replay it on the YouTube stream. Sometimes I talk too fast. I apologize, but see you soon. Thank you all for being here, for everyone on the YouTube and TikTok stream. See you next Sunday, or see you tomorrow. We'll be streaming tomorrow. Yeah, this is our second stream of the day. We already did a 2 or basically 3 hour stream here today. Hey, thank you, Timothy. See you, Num. Thank you for everyone being here. Y'all are the best. No, thank you guys for being here. I enjoy doing this.